All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. All right, so today is Monday, it's February the 27th, and of course, I am in a trade. So, considering that the last 4 trading sessions of last week, right? Monday was a holiday, so we only had 4 sessions last week. The market has been down, with the exception of the 23rd, where the market finished up roughly 0.5%. But nevertheless, when you look at all 4 trading sessions combined, the market finished down roughly 3% last week. So I was really expecting or anticipating that the market would actually bounce today. And when I woke up this morning and checked the ES Mini futures contract, I noticed that the ES Mini was up roughly 20 points. And so the ES Mini is a good indicator of where the market, or the SPX, is going to open when the market opens at 9:30 a.m. Eastern Standard Time. So it's a good indicator, right? So I always check the E-Mini, the ES Mini before the E-Mini before the market opens. So I got into this trade at roughly 10:35 this morning, and I started out on the put side. And again, because first of all, the market has an upward bias, so we know that the market is always looking to go up. And the fact that this morning, every sector of the S&P 500 was in the green. Now, although you can see here that the utility sector is currently in the red, but when I got into the market this morning on the put side, every sector that makes up the S&P 500 was in the green, right? So and that's the reason why I decided to go on the put side to sell this vertical put credit spread, to sell the 39.65 and buy the 39.55, creating this $10 wide spread. I sold 4 contracts, so essentially I have $4,000 of capital that's on the line, or that's required for this particular vertical put spread. And because the underlying, of course, the underlying is SPX, 0 DTE, right? So it expires today. The underlying started to move towards my vertical put credit spread, so I decided to reduce my risk by taking in more credit and turning my vertical put credit spread into a non-condor by selling on the call side the 40/40 and also the 40/50. So essentially, it's a symmetrical iron condor, meaning that the spread width is the same on the call side as well as the put side, and then I'm selling the same number of contracts. And so the credit that I took in for this iron condor is $300, and so that's right in line with what I look to make on a daily basis, which is roughly between $300 to $500. Okay. So now the other thing that prompted me to get into specifically the vertical put credit spread this morning was I looked at the market internals, and the market internals specifically the advanced declining indicator was actually up over 2,000 at one point. So meaning that that's extremely bullish, right? So meaning that there were significantly more stocks increasing on the New York Stock Exchange versus decreasing. But as you can see, it has come down. It has come down since. As you can see, it has come down since. So right now, it's at 1093, the ratio, but nevertheless, it's still in positive territory. As you can see, it's starting to pump just slightly here. And then the volume that's going into those stocks that are increasing on the New York Stock Exchange is a lot greater than the volume that's going into the stocks that are declining. So all signs pointing to the market ending up, or certainly being up for the majority of today's trading session. And again, like I said, the 11 sectors that make up the S&P 500 were all in the green. And specifically, I'm always looking at the XLK and also XLV. XLK is the information technology sector, and it has about a 28% weight or influence on how the market itself moves. And the XLV, which is the healthcare sector, has about 15%. So those two sectors together, have a pretty significant impact, or have a pretty significant influence on how the market moves. So I'm always looking at those two sectors. So right now it's 1:22 p.m. Eastern Standard Time. So although the underlying SPX is, some folks might find this proximity of my position to the price of the underlying, rather close. But considering that, again, the majority of the sectors are in the green, and also the market internals are up as well. I'm not concerned about the SPX dropping significantly. However, I'll come back and give you guys an update at roughly maybe 3 o'clock, just to let you guys know how the position is panning out. All right, so I'm back. It is, I know I said I would come back at 3 o'clock, but nevertheless, it is 3:53 p.m. So we got roughly 7 minutes before the market closes. SPX right now is at 39.80 and some change. So it's pretty much going to close right around where it closed this past Friday at 39.70. So so again, I don't think the market is going to be make any major moves until 22 March, and when the Federal Open Market Committee meeting takes place, and the Fed announces the next interest rate hike. So until then, I think the market is going to play it very cautiously, and you're not going to see any major moves. You may see some major moves in the beginning when the market first opened, like we did today, when the market was up about 30, 40 points. It got up as high as 40.18. But nevertheless, so the market is definitely going to be cautious until the next interest rate hike. So I'm going to be walking away with the credit of $300. As you can see here, I've made the entire credit of $300. So again, another successful trading day. Hopefully you guys are doing well. Again, if you guys have any questions about, options trading, you can send me an email at info@cubicleinvesting.com, and we can have a conversation if you guys like. At any rate, have a good day and take care.